This is Eric Muathe with Muathe.com with another mentorship video. I wanted to discuss briefly an idea that always gets lost in all this trading. And the idea is that we're always looking for new ideas to buy, looking for the next great moving stock. But in doing that, myself, and I'm sure all of us, we find ourselves sometimes a little bit confused on what it is exactly that we are looking for. So I find that interesting that even though I've been doing this for so many years, there are times when I can go for days looking for certain setups or different types of things, and yet in reality all I should be looking for is one particular type of setup. Why? Because that one type of setup is the one that gives the most powerful results. And what I'm talking about is this number here. Now, I've discussed this number on many occasions, on many levels. Everybody knows what this is. The other one is 38.2. All I am saying is, if you want to be in the sweet spot when a stock is about to move, you have to concentrate on this. Of course, we've talked about the product of this being that you can also extend this to this number. I have videos discussing this, so in case you can't find them, let me know. But these two numbers are pretty much the same. It just depends on how you look at them. And also this one, they're all the same. All these numbers are connected. Okay, so let's not confuse that. So even though I'm talking about this number here, all of these derivations, all these numbers here, even this one and this one, all stem from one main number, and that's the one that I am talking about today. All of them stem from the same number here, and all of them in reality stem from this one number. This phi constant is phi, or some people call it God's number, or the golden mean. So all of them stem from this 1.618. So let's not forget that this is also from the Fibonacci series, that this is the number that is a constant in the Fibonacci series, especially as you get bigger and bigger into the calculation of the series. So just anyway, just for the sake of explanation here, I think it goes like that: 1, 2, 3, 5, 8, 13, and of course you're just adding each subsequent number. You go to 21, you go to 38, not 34, then you go to 55, you go to 89, on and on. So anyway, so that's the number. So 1.618 is where we get 61.8% of the Fibonacci number there. So let's go back to what I'm saying here. When you're looking for stocks and you want to find the sweet spot, this is what we need. Always ask yourself, where are you in relation to this? And I'm going to keep this one very simple. We are going to be focusing here on the monthly. This time frame is hardly used by most traders. Why? I don't know, but it is not. Most traders would spend their time looking at daily charts and hourly charts, but this here needs to be used a little bit more, in my opinion. And the number to watch again is 61.8. So in other videos we've discussed at length that we are always looking for stocks that are moving to 3-year highs on the RSI and the MACD. So we know this. We know this is where stocks start moving. All I am saying in this video is really because you can't own all the stocks that are making 3-year highs on their RSI and MACD. You're probably better off finding another way to narrow it down. So I say let's concentrate on this number here, 61.8. 30.8, and I'm going to explain that in a couple of videos. So this is the number here. All right, so let's go through some examples. What we are looking for in truth is, let me take that off. We are finding, so if this is the RSI, and this is obviously 69.1, or people approximate this and put 70, and I know they put 70 because they know something happens around that level, even though they don't understand it very well. But it is actually 69.1. Here it is 30.90, even though most default charts will come with 30. But the true number is this, and the true number here is here, and I explained that in other videos. And of course this is 50. What we are looking for is, we want stocks that are breaking out right here above 61.8. This is a sweet spot. You want a stock that is at the very least making its first breakout above 61.8. Why? Because this is a sweet spot. This is where you get this absolute thrust in momentum, and again you get another thrust in momentum should the stock also move eventually above 69.1. So this is the sweet spot. You're looking for stocks that are moving above 61.8 for the first time in more than three years. So that is what we are talking about here. So this is for stocks that are moving higher. If you are looking for stocks that are going lower, the sweet spot is the same. So we're just going to come here and we are going to say that we want a stock that we want to go short to be breaking down again at 61.8 inverse. All right, this is 61.8, but because we are now counting from going down, we can say that it is 38.2. 38.2 and 61.8 are interchangeable. I am assuming by now you know this. So 61.8 and 38.2 are interchangeable, and so we are looking for stocks that are breaking down to 3-year lows. So we go back to our 3-year lows requirement, and more so we are looking for a stock that is moving below 38.2 for the first time in more than 3 years. It is best if it is all-time move below 38.2. So if it is the first time the stock is moving below 38.2 and making new lows on the RSI and the MACD, so this is a requirement for both the MACD and the RSI, okay, that this is where you want to go short, because this is where stocks really start picking up momentum. Yes, you're going to miss some move on the way down, but if you want to find the sweet spot where the acceleration just starts really pushing the stock, then these are the levels to watch. Again, on the way down, 38.2, which is also 61.8. On the way up, you want stocks that are moving above 61.8 for the first time in three years minimum, or at least, and at best, if they are moving to all-time highs. In other words, if the stock is moving above 61.8 for the first time ever, that is when you're going to get an absolute thrust. So we're going to go take a look at some examples so we can clarify this in our minds. Okay, let's take a look at some examples. We're going to take a look at CVTI. Now, the stock has had a nice run. Anybody would like to have owned a piece of this action. And from the breakout standpoint, which means moving above the prior resistance levels, we can see that the breakout, there was a breakout that took place somewhere here. As an example, there were many breakouts in this stock. And the reason why we play breakouts is because you get a chance to own a stock that could potentially move higher and never look back. That's the theory anyway. The theory is that you want to own an instrument that has a possibility of moving above prior resistance. In this particular example, you see it comes back and tests that. But the theory here is you're looking for stocks that break out and potentially don't look back. So you want to ride the momentum. So I'm just showing you visually what you're looking for in an ideal setup. Of course, it's not gonna play out that way because stocks do fail and it's not always a straight shot to the upside, but that's the theory. Understanding the theory is important if we are going to have a method of finding out how to own stocks. That's not why we're looking at that aspect of trading, the breakout aspect. What we are looking here is, again, we're going to go back and take a look at examples that highlight this understanding. So instead of spending all day and weeks looking for a good stock, why not just find out what stock is breaking out, and especially in reference to this on the monthly. So this is a weekly chart. Let's go to the monthly, and you can see here on the monthly what it looks like. Let me go back a couple of years because we want to make sure we have the 3-year high. So this is now showing going back many years. Just want to show you that there was a breakout to 3-year highs somewhere here. So between 2011 and then the breakout here late. In fact, you can go back and say that the RSI was breaking out from here. So between here 2010, mid of 2010 and mid of 2013, you have 3 years, and the sweet spot, as we've been discussing, is the movement above that general area above 61.8. Now I have videos discussing this method, and if you go to YouTube, just search for this. I think the series is about 4 parts deep, so take a look at this. I discuss in detail what I call the universal law of phi breakout, and that explains what we are talking about here. So let's move on here, and we can see that it is the breakout to 3-year highs, just breaking out above 61.8, and that is what I'm encouraging all of us to be looking for instead of looking for all sorts of setups. This is the sweet spot, and it also did coincide with a price breakout on a monthly level, moving above the prior monthly closing high, which was here. So for the purpose of this video, we are looking at the sweet spot. And so if you own the stock at that breakout to 3-year highs and also jumping above 61.8, you have the high odds of riding this thing to the upside. That doesn't mean that this is the only place you can go long. As you can see that there were other breakouts after at least 1 month of rest. 1 month of rest after that high led to another breakout here. There was a high there and 1 month of rest and a subsequent breakout. So there were also other entries on the monthly chart. This is very simple. Yes, it's not simple, but you can see that it made sense as we move to 3-year highs and a move above 61.8. We also see another thrust in momentum when the RSI jumps above 69.1, and I have explained in other videos that this is similar to 61.8. And again, you can go to my YouTube channel on the playlist, take a look at this couple of videos, and this is where I discuss this is the title of the playlist, okay? And just take a look at the 4 videos where I explain the relationship between those numbers that I'm talking about. And once you see those for the first time, if you haven't seen it, then it makes sense, and from there on all those numbers are going to make sense. So we can see here that that is all we needed to at least be part of this nice move in this stock, and throughout my videos, you're going to see hundreds of examples that this is where we should be spending our time, looking for this breakout right here, 3-year highs, okay, on the RSI, 3-year highs on the MACD, and I'll show that, whoops, on the MACD, and more so when it is moving and coincides with this. When it's doing all this, and especially around this number, you might have a mega winner at hand. So let's take a look at what the MACDs were doing. So remember, this is going back to the time period somewhere here in the breakout took place in October time period 2013. So let's take a look at what was going on about that time on the MACDs. You can see that the MACDs were already breaking out around that period, and this is this period here. So you can see that the MACDs were moving to 3-year highs at the same time. So that meets our minimum requirement, and that's why the stock went on to do great things. Let's take a look at another example. It is Gilead. Just want to go back. This is a monthly chart. Take a look at this line around 61.8. And of course, we can see that this is a period spanning from about, so this 2008, late 2008, and the breakout taking place around middle of 2013. So that's more than 3 years. That's what we need. There's a price breakout. Stock finally moves above 61.8 on the monthly. So that's your 5 breakout. That's perfect. So we're talking about this period here, middle of 2012. Let's take a look at what the MACDs were doing. So middle of 2012 would be here, this period. See what the MACDs were doing there. We had the RSI on the monthly making a move above 61.8 after some resistance. We see that the RSI was already trading and breaking out to 3-year highs minimum. We can see that we want at least one of our MACDs to break out to 3-year highs. So this, at least one of these settings should break out to 3-year highs. In this example, you can see one of them was at 3-year highs in step with the RSI breakout, and eventually there's also a breakout on the main MACD. So the MACDs did their thing and broke out to 3-year highs. MACD, correct. RSI also did what it needed to do, and the key here is 61.8. That's where we should be spending our time, looking for these types of stocks. Okay, so here's another perfect example. So let's take a look at inverse when you're looking to short stocks and you want to own them while they're moving high. One thing I have to mention here is, yes, you don't, using this method, you're not going to buy the stock during these lows or these lows. So I understand that. We are looking for stocks that are breaking above resistance. So this is a different method. Some people will ask, well, Eric, doesn't it make more sense to buy the stock here and here? I say, yeah, sure. But that's on hindsight. You don't know whether this is the low at the time or this is the low at the time, but you do know for a fact that when the stock is trading back up to the previous highs, that it is at least moving above the previous monthly closing high. And you can use that as a gauge for health. So once it attempts to move above that monthly breakout, you take the breakout and you buy the breakout on the day, on the hour, and possibly even on the minute the breakout takes place. You don't wait for the end of the month. So you take the trade when it happens. All right, so let's move on to at least two ideas on the short side. So let's take a look at crude oil. This has been the talk of financial media, and especially, I would say, everybody, because it affects gas prices. This drop, massive drop in crude oil, can be explained by 61.8, the sweet spot if you are looking to short crude oil, this was the sweet spot. Of course, 61.8 is also 38.2. So we can, here we're going to use 38.2, even though we know that they're the same numbers. Okay. All right. So we can see here that 38.2 is going to be somewhere, we draw this right, approximately somewhere there. You can see that that break below 38.2 took place here, which also happens to be where crude oil was trading in the 80s. And since then, we've seen it drop more than 50% or close to 40% from the 80s here trading to the, so a big drop anyway is what I'm saying is. And the key here for the sweet spot to go short was this move below 38.2 for the first time in more than 3 years. In fact, for the first time going back about 5+ years. All right, so that was the reason why you would have known that this was going to be a serious drop, because of that 5 breakdown. And so if you're looking to go short, the key is find stocks that are moving their RSI on the monthly to 3-year lows. Oops. 3-year lows on the RSI on the monthly, and especially if they're going to be moving and dropping below 38.2. That's the sweet spot. Now we can see that that also coincides with the MACDs moving to 3-year lows, so the minimum requirement for going short is being met. You can see here the MACD also moves to 3-year lows. And also here the MACD moves to 3-year lows. So the minimum requirements are met at that particular point. So that's the sweet spot. Let's take a look at another example. Okay, we recently saw the drop in Freeport FCX. Why? Because we see here that the RSI on the monthly, this is a multi-year monthly chart, RSI cracks down below to 3-year lows. So we got your RSI making a 3-year low, and we got that move below 38.2 for the first time in many years, which happens to be just around there, which is the reason why we've had this massive drop from the higher 20s now trading in the mid-teens, and probably potentially could see lower prices. And we take a look also at the MACD for the last couple of months. You'll see that the MACDs are not disappointing. Right there with them, at least one of the MACDs, and this is not the best. Let me give us more information there. It's not the best because I can tell here that the MACDs are lagging slightly. So if you want the best, insist on the minimum requirements being met. So you can see that right now it is breaking to 3-year lows. RSI is already at 3-year lows and below 38.2, and the other MACD is also just about to make another push to 3 years low, if not going back to 2009. So this lows, multi-year lows, slightly delayed reaction here, and so we can see now that they're cracking to 3-year lows. Maybe there's more downside. Don't forget that as I look at this, there's that move on the RSI. The RSI is now punching below 30.90, 30.9, which explains why we are seeing this continued drop on the monthly. So yes, if you want to find the sweet spot in trading, it is very important that you understand where your stocks are trading in relation to this 38.2 if you want to go short, or if you want to go long in relation to 61.8. This is the sweet spot. This is where you increase your odds for riding some of the big moves in the market. Remember, we are only doing our best to increase our odds. You are not guaranteed success. There's no such thing, I believe, and we all know that in the market. But all we are looking for is an increased situation where the odds are more in our favor if things play out. Eric Muathe, good luck, peace, and blessings. Mwah. Woo!